What's going on, everybody? Can you let me know that you hear me? Why is my... Oh yeah. Alright, looks like it's working on my end. Can someone just confirm you guys can see my screen, hear me talking? Hard pumper, he's on here, but he's... Oh my gosh, what the heck? Your normal host is in the chat, but he's not on camera. Unbelievable. Murray, you're like the only person that has an issue with my microphone, so I don't know what to tell you, other than probably sucks you gotta crank your volume, but I recommend you just crank it for this. So I go back and listen to it on my end, it sounds fine. I'll play with it later today. You guys don't need to see me work through sensitivity settings. And if you guys can't hear me, please let me know and I will start to shout. Alright, but today we're going to go through our pre-market prep, just like we do every single day. Normally Michael's on here. I sometimes sub in for him. So what we do at Gamma Edge is our process really revolves around the SPX options market. Reason for that is just given the growth we've seen over the last number of years, it's become very influential, and it's a very good barometer of kind of how the general market sentiment is positioned, both in terms of kind of the longer term outlook, which is through the SPX A, then SPX P is kind of shorter term. Then we'll get into 0DT as well. But before all of that, we always start with the market trend model, and I just want to pull something up real quick. So we're going to go through terms and whatnot today if you're new to Gamma Edge. If you go to gammaedge.us / go to our blog, we have a ton of... Give me 1 second. Alright, sorry about that. Cats are getting into something. But anyways, as I was saying, gammaedge.us / blog, there's going to be, market trend model, intraday volume analysis, SPX A versus SPX P. So if you get confused, you can always send us a message, right, in the Discord. You can email us. Happy to go through that. Or, we have a ton of different blog articles. Something else to be aware of is in the coming days, we're going to be introducing kind of a new course, for lack of a better term, called the Gamma Edge Fast Pass. It's an evolution if you're familiar with the Gamma Edge framework. So be on the lookout for that. This is our entire methodology, basically packaged up for you guys for free, so you can learn all the tools, how we think about the markets, all that good stuff. But I know you guys didn't come to hear that. You came to hear about the pre-market prep, so we'll get to that now. Looking at the market trend model, all systems go pretty much from what this is telling us. Had a nice kind of linear update, a weak linear update yesterday. Cumulative tick trending higher, robo tracks higher. Filter tick, a little bit of filter tick into the afternoon session, so that was good to see. Longer term moving average, moving higher. So yes, I know there's a gap down this morning, but given what the structure of the market trend model is saying, that should be bought up. So if it's not, then that's kind of a pretty bow shot, as we like to say, kind of first indication maybe this time is different. But until we start to see kind of slicing through the longer term moving average ribbon, kind of structure favors more of the bulls than it does not. So now what we do, we'll get into SPXP options complex. Always start out with SPX A. Why? It's important that you bifurcate the SPX. If you weren't familiar, there's an SPX P and an SPX A component when it comes to the options market. SPX A, 15 million contracts versus the SPX P is 4 million contracts. The SPX A, like a cruise ship, it's much bigger. It's kind of where your longer term institutional, slower moving money is positioned, is doing their hedging. So that is the reason that we like to bifurcate those, because it's kind of fundamentally two different agents acting in the market. Anyways, as we can see here, fairly call dominated structure. Keep in mind, closing spot prices are 62.80, so 62.40, 62.45 is where I last saw we were implied to open before I got on this. So yeah, really the big takeaway here is just, generally call dominant environment, generally good, matching up with the market trend model. Not a ton else to say there. Just going through the other tools, true zeros trending higher, good to see. The GEX ratio, just a little bit of a pullback in the context, nice longer term uptrend. So we just want to be mindful that this just doesn't, progress lower in kind of a waterfall fashion. We really want to see it kind of stable out and move higher. Keep in mind, this per se is not like actionable what I'm talking to you about right now in terms of the GEX ratio. Like, you shouldn't be running out and selling everything today because the line was moving lower. It's just kind of situational awareness and something to be cognizant of. We go into more detailed delta balance. I'm not going to discuss that here. Again, you can go look at the article if you are not familiar with this. But, net delta balance line is pinned at 1 throughout really the remainder of the year. So that is, more constructive than not to see. Again, there's some commentary that we have for you. Getting into, this is just the July expiration. Again, fairly call dominated as well there. Okay, getting to SPXP, this is the full complex. Again, 4 million, so this is kind of your speedboat, so to speak, because just given short-term speculators tend to dabble more in this because this is your daily, this is your weekly, this is where your 0DT resides as well. So again, call dominated environment above and below spot price. See our our DEX transition zone, which is 6260, 6195. This is just an area of transition in the structure. So think of this as more of a chop zone. We are set to open kind of right in the middle of it, 6240. So, from a bullish point of view, really want to see us rebound, get above 6260 on kind of more of a global level. And then if we were to lose 6200, 6195, that would be a bit more concerning. And if that were to happen, we'd likely see probably the market trend model water falling lower, all that good stuff. So net is still fairly constructive here. We're not seeing, mass put speculation coming in, call speculation going out yet. So really just kind of wait and see mode. Yes, I know we have a gap down, but it's going to be a good test to see if that kind of gap down breaks the dam, so to speak, or if it gets bought right back up. Again, same charts we go through on SPXP. We did SPX A, the true zeros, trending higher, flat to higher, good to see. GEX ratio, not a ton else to say here, kind of middle of the range right now. Consolidating above 1, which is good, which means net call gamma is greater than put gamma, but we do want to see this start to resume higher as well. And when we see this little bit of divergence between price and the GEX ratio, obviously, it needs to resolve one way or another. So we really want to see this resume higher, market trend model continue to move higher, push above the top of the transition zone. That's kind of how those three tools interact with each other to give us kind of more of a confluence that, hey, we're more comfortable that the market is probably not, collapsing here. We're going to see a resumption higher. Delta balance tool, same thing, quick glance, just looking at the net delta balance, the blue, trending higher, good to see, or not trending higher, but pinned at 1, good to see. So now getting to SPX 0DTE here. So we have, so here's what it looks like in the Discord. We mark up the DEX transition zone 62, 65, 62, 70. So this is kind of the key kind of core first level. Then we have our drunken sailor range 6290, 6255. So obviously we are opening below the bottom of the DEX transition zone. So net, a little bit of a bearish stance on an intraday basis starting. So the key thing that we want to see is obviously a reclaim of those key levels. So 6250, kind of a key psychological level. Want to see that reclaimed. We want to see 6255, which is the bottom of the drunken sailor range. Want to see that reclaimed, and then eventually we want to start to see a progression up into the rest of the transition zone. Keep in mind, transition zone going to be choppy within here. So if we do see that push higher, just something to be cognizant of, really focusing on just where those key levels at, probably smart tactical trades in this level. As an example, get above 6250, get above 6255. We kind of see the first a large ledge at 62.75. So maybe, you know, just thinking about tactically a trade up to that level and then being content with that, because we easily could start chopping around here. Yes, we could obviously rip higher, but again, especially on days like today, opening below the transition zones, once we start to move into the transition zones, just know the risks that come with that. So that's kind of why tactical trades make more sense, as opposed to, you know, prior days where we're opening towards the top of the drunken sailor range, we're progressing through it to the upside. That's easier to hold kind of a longer trending move, as opposed to right, the vice versa, below it higher. But then on the flip side, if we fail to progress higher and we start to melt lower, then perhaps we get a trending move to the downside. That's going to be where our intraday volume analysis is important, what the cumulative tick, filtered tick on an intraday are telling us as well, and then if we're just, you know, taking out those key levels to the downside. So yeah, then you can see in the Discord, right, you know, we just have pretty robust write-ups on the various kind of key levels I was just like alluding to, right? Just having those key if-then statements on, you know, if this happens, then we're going to go to this level, go to that level, all of that good stuff. So yeah, I mean, really not a ton else to say there. You know, if we continue to melt lower, 62.30, that's going to be the first level to the downside there, and then really after 62.30, we're just going to be looking to see if we get a progression of really our intraday volume analysis continuing to trend lower, market trend model continuing to trend lower. I know I've already said that, but it just bears worth repeating. If you're not familiar with our intraday volume analysis, this is what it looks like. Like yesterday, you could see it was a kind of a more decisive trend higher day. So, you know, to the downside today, if we do get some kind of move, it'd be kind of flip-flop where we see puts moving lower, calls moving lower, and then kind of intersecting that with our key levels to see if we're breaching those or not. So if that's not clear or not, please let me know. As I was saying earlier, you know, on our blog, we have an entire lesson on intraday volume analysis, or if you've been watching our pre-market or post-market videos for any amount of time, you should be pretty clear how we are using that on an intraday basis. So looking at here, I have SPX up right now. I have the SpreadX version, so this is where we're implied to open 62.44. So yeah, not a ton of movement. Still stuck below 62.55. So kind of trading near lows of the pre-market. Here's futures. So yeah. Cool, yeah, we can get into single stock stuff now, see if there's anything interesting that looks there. If you guys have any questions, let me know. No, Moise, we don't do anything about buying leaps or longer term options using our platform. Probably the closest thing you'll get to that is, so we have a mechanical strategy called the P Transit Plus X strategy. Right here, 100% mechanical. You know what's going to happen the night before, what our entries and exits are. Feel free to read through it. You know, significant outperformance relative to the SPY on really any type of time frame that you slice and dice it over since 2013, and kind of any, you know, time frame from there. It's based off our key levels. So yeah, maybe that's something you can look at. Keep in mind, you know, those trades duration is like 30 days. So, you know, we're not buying a year leaps out. Those are still relatively quick trades relative to your question. But no, we're not saying, and especially just the nature of like the options market and the analysis, like they don't necessarily lend themselves well to you know, seeing what structure looks like a year out from now and forming a trade based on that, off of that. We don't really think about it in that type of manner. We're much more kind of multi-day to multi-week focused. So yeah, there's that. Hopefully that answers your question. If not, feel free to reply to that, and I will continue to elaborate till it makes sense. So we have Sorry, I'm just getting my bearings here, making sure I have the right script on. Yeah, so here we have Apple. I'm just gonna go to the Mag 7. I'll hit on some other stocks. Yeah, we'll get to Tesla, we'll get to all that good stuff. So Apple, just looking at kind of a price action point of view, looks pretty constructive here. Had a nice push last week, this week kind of a consolidation, holding the levels. Looking back through this week, we can clearly see that our P-trans level at 210 has been a massive focal point. It's really been the oscillator that price has really meandered around. A little bit of a gap down towards that level today. We're starting to hold it right now, so that's going to be the key level for the bulls is this 210. See if we can hold this and then progress higher up to 215 is kind of our first profit taking zone. So just be cognizant of that. And then this isn't near all-time highs yet, so potentially it has room to run. So something to be cognizant on there if you're interested in Apple. Nvidia, I'm not super interested in this stock just because it's at all-time highs, continuing to ramp, so hard to get long when it's, basically made like a 90% move straight up from the April bottom. Microsoft, same boat, 500 kind of P-trans plus GEX level right now, so not really a ton to do there. Amazon, nice consolidation on kind of a multi-week basis. That's good to see. So, kind of easy to size your risks there. We can see, really the key trading zone has been between plus GEX and P-trans 220, 225. So not necessarily anything to do there. I'd want to see kind of a breakout above this 225 level, which we've been consolidating in all week. Google, same story, multi-week consolidation. Just a pretty big trading range this week, so that's good to see. A little bit of I'll just call it a flag for lack of a better term on the daily chart, but really that's just a consolidation of price. So yeah, let's see if it can break above its P-trans level at 177.5. That would be a great start, and then obviously just start to progress higher. Looking at Meta, I mean, that's up near all-time highs right now, so not a ton to do there per se. I mean, you can see P-trans, a ton of interaction all week around this level, so if you're dying to get long this stock, that'd be kind of the level that you want to see hold. Tesla. So the question from Diego was, could we see 19 or 20 today? That'd be a pretty big intraday move. So could we see 20? Maybe, right? It's always a chance. First off, we want to see this 207.50 level hold, which we can see that there's been clear respect for in the pre-market. So that's going to be a key level for the bulls, how we want to see hold. Obviously, I think it's probably going to take the general SPX to turn around as well to see that progress higher. But yeah, certainly, I mean, takes out pre-market highs and maybe gets a rip higher up to 320. So not saying it's not possible, but I got a lot of work to do. Are there any other tickers out there you guys want to see? I think someone said AMD, right? Yeah, AMD, I mean, frankly, not a ton to do right now. It's just in no man's land between different key levels. So unless we get some kind of pullback down here to 39 or 40, not super interested in doing anything. But if you're already long the stock, then it looks pretty good right now. Hood, I mean, this thing is just ramped to all-time highs. Not a ton else to say there right now. Coin, all-time highs. Not a ton else to say there right now. Palantir, all-time highs. Not a ton else to say there right now. Circle. Yeah, so Circle, I mean, it's clearly been respecting this zone right here. So, I mean, keep in mind this is a newly formed IPO as well. UNG, natural gas. I'm not going to go through natural gas just because, you know, like ETF options market isn't necessarily going to control how a massive commodity of natural gas is going to trade. SoFi, I mean, SoFi's ripped all-time highs here too. Hard for me to get in there. I mean, you see the key levels here, but yeah, I'm not interested in SoFi right now. Any other tickers? Yeah, I mean, UNG just looks like crap though anyways. OKLO. 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 Where did my stream go? Yeah, here's OKLO. Looks pretty good actually. So we really want to see this 53 level hold. From there, you know, progressing up 57 up to 60. So OKLO looks pretty good here actually. MSTR. Lemonade is like the worst stock ever, I think. Yeah, MSTR, I mean, that's really going to ride the waves of Bitcoin, right? Bitcoin's been ripping. This is basically just levered long Bitcoin. So kind of similar to my comment on UNG about how that's kind of a commodity, you know, really going to be tied to supply and demand of that. I mean, MSTR is really just going to be tied to what Bitcoin's doing. But here's some key levels, you know, if you're looking for profit taking or whatever. Look at that. I doubt we have lemonade levels in our scripts. Well, this stock is, I mean, it's still trash compared to where it's backed at, but let's go here and look. I mean, there's only 102,000 open interest, so really not, options are not super material here. And yeah, what we can see is, I mean, just where it's trading, like, I don't really have many comments here. Structure is just pretty sloppy. So yeah, not super, it's anything super interested from kind of an options or our analysis. So yeah, with that, so we're about 5 minutes till the open. I think we covered a lot of ground here. Hopefully this was helpful. Get you guys set up for the day. With that, you guys have a great weekend. We're going to shift to the Discord now. We'll be in there talking. I'm going to give the market probably 30 minutes to clear. Then I'll be on looking for trades and whatnot. So with that, appreciate the time. We'll talk to you later. Thank you.